Good morning. Thanks so much for tuning into the trade setup. I'm Neeraj Shah, and there's lots to contend with if you have just woken up and trying to understand what to do when it comes to the market, because the global markets have had a flurry of activity, from the Chinese tech stocks coming off to stocks the world over correcting maybe marginally or severely over the last couple of days due to the Fed news there. The dollar index inching up a bit, commodities coming off quite rapidly in the last two sessions. So lots to talk about. Somebody who actually looks at all of this with equal elan, Peter McGuire, joins in right now to talk about that. Peter, great having you. Thanks so much for joining in. Good morning to you. Peter, can you hear me?
Yes, I can, Neeraj. Good morning.
Very good morning. Peter, what's your sense about how the markets would be looking at the Fed minutes? Because the last couple of days there has been a flurry of activity with European markets cracking quite severely yesterday, as did Asia, but the US markets held out pretty okay.
Well, exactly right, and good morning. I think that the whole momentum at the moment has certainly been stronger US dollar. The equity markets really haven't tailed off at all. We've seen general sell-offs across, as you mentioned, the European side and certainly across some of Asia. And I think everyone's focus is very, very glued to what happens as far as Jackson Hole. And I feel as though we've got, those strong unemployment numbers. The overall growth of the US economy has been really shot the lights out. So let's see what the Fed is prepared to release or take us on a little bit of a joyride.
Yeah, the only point is, Peter, I think the Fed has been preparing investors for a while now about any possible tapering. And as of now, it's the market's assumption based on the Fed minutes, which were divergent at best, but yes, more hawkish than what the latest meeting was. So do you reckon that the Fed would, as the Jerome Powell, as he has always done in the last 12 months, soothe frayed nerves? Or could he say something that could actually spark volatility, if not anything else?
Well, I think he's got to be very careful with his wording. We would have expected to see, in some ways, the New Zealand market to really look at raising rates this week, and that was a false alarm. So I think that the Fed's got that in mind also as far as Delta variant. It's a very fluid situation, Neeraj. So that's where I think Jay Powell has got to be very careful with his commentary, and any phrases that he does use need to be very, very guarded, because it could spook the markets a little bit. We've seen the general theme as far as where the US dollar's traded, what's happening on the situation with Europe, and of course those ongoing COVID sagas, and a return to, could it be a return to more lockdown? So that's where I think they've got to be very careful, and it's really very much a day-to-day proposition for the Fed.
Yeah, it is day-to-day proposition, and for now the US is also not breathing easy when it comes to some key states. Actually, you mentioned the dollar index or the dollar, Peter, that's seen a bit of a bump up really, and that's made the other markets a bit nervous. What's your sense here?
Well, it's sitting at around about 93.5, Neeraj, so that's where it's had a very strong move to the upside. Could it be a 94 handle? I mean, these are, I don't think it's going to surprise a lot of traders. You've seen that general softness across euro, yen nearly at 110. You've got the British pound being sold off strongly. Aussie dollar, only a couple of months ago, 5 or 6 months ago, we were going to break 80. Now you're looking at about 71, 71.20. So that really gives some sort of demonstration as far as how much softness we've seen. And all of that needs to be, I think, considered from a trade perspective.
Yes, indeed. It does need to be. One final question, Peter, and that is when it comes to commodities, which have seen a deep crack the last couple of sessions. Metals have gone off, and crude too is certainly off the boil. In fact, as I heard you say, very close to a 20% decline from the peaks.
Well, exactly right. It's been an enormous short to be across base metals and, of course, the energy sector. What we've seen in crude, Neeraj, absolutely, the last week and a half have been one-way traffic, and many traders are rubbing their hands with glee. So it's been a solid sell-off. Will that momentum continue to the downside? We've got Brent sitting at that 66.80 handle. You've got WTI ready to crack through $64. So there's every chance you could be by end of month. Why can't you see a 61 handle for Brent? Why can't you see a $60 handle for WTI? It's very achievable. And I think that softness may continue. So I think that's what traders are looking at the moment. And that's why we're very conscious as far as Jay Powell's rhetoric and any surprises coming out of Jackson Hole.
Yeah, Peter, just one quick 30-second answer, if you will, before we wrap up. What about the other commodities? Iron ore has plunged the last couple of days. Steel has come off as well. What happens to industrial metals?
Well, those base metals have been very strongly sold off. And again, everyone's short metals. So that really gives us some sort of concern. What's the storyline with China? What's the story as far as the growth going forward? And I think that unknown, which spooks markets, that's the spook as far as the lockdown. Is that really, where do you find your footing? So that really, I think, has taken traders by surprise. And if you're a trader looking at, shorting the market over the last week or so, it's just been absolutely electric, Niraj.
Yeah, it has been. But Peter, really appreciate you joining in and giving us some perspective about what's happening around. Jackson Hole becomes so much more important than what was thought maybe earlier. Thanks so much for joining us today.
Thank you, Niraj. Take care.
Well, that's Peter Maguire. Looks at currency, commodities, the Fed with a lot of keen eye, and therefore his opinion today of all days was very, very important and crucial to get you. Now, viewers, we will start off week is known, right? The SGX Nifty indicates a start which is about 200 points lower than the close on Wednesday's session. So that is part one. This will indicate a start which is in the green, which is 16,348. But remember, compared to the Nifty's close on Wednesday, we are about 200 points lower. That's known, everybody. Now, there are just a couple of things that I want to say out here. One, all this while, dips have been bought into. We were looking at reopening trades. The Fed came in and soothed frayed nerves every single time Jerome Powell spoke. This time around, maybe no different, but for the fact that the unlock trade, maybe in India, is still looking okay, but it may not last for too long, if you will. And it's a hypothesis that you have to build, that with this Delta variant spreading wide across, and cities and countries which were very strong earlier, Israel, for example, mulling lockdowns, you don't quite know how smooth the situation is on the earnings front. So you've got to be careful of that, because buying the dip at 12,000, 13,000, 14,000, boy, even 15,000 was probably okay. Buying the dip at 16,500 is a different kettle of fish. So if you have solid conviction in your stocks, please go ahead. Otherwise, just make sure that you're not leveraged. That's the limited point I'm trying to make. Now, very quickly, what could happen today? Remember, the MOE function will tell you that irrespective of what happened to the market breadth in Wednesday's session, we'll have a weak start today, and the market breadth will be weak. So that is part one. So that is well known. The point is, a lot of commodity linked spaces could see deep cracks, and that constitutes a wide portfolio of the retail bucket, and that might be under pressure. There is a list. So, the commodity stocks, Hindustan Copper, Vedanta, Hindustan Zinc, all of them in focus for different reasons. Hindustan Copper, obviously, because of the copper price crash, and Vedanta because of the iron ore price crash. And Hindustan Zinc, curiously, has come out and said that there is no change to their dividend policy. It showed a big crack in Wednesday's session because there was no dividend declared, and people thought, oh boy, would the money get used differently? Well, Hindustan Zinc has come out and said, our dividend policy stays intact. Could that stock actually be a bit of an outlier in an otherwise metals carnage today that is expected? Let's wait and watch. I'll watch out for, of course, remember, I just forgot, there's a car trade listing today. So that's something that everybody would be watching out for. So that is one key name to be monitoring today. I think for a small price stock like Ujjivan Small Finance Bank, there could be a bit of an issue because Nitin Chugh, 2 years into his term, has resigned as MD and CEO. Remember, he joined in after his stint at HDFC Bank, and there was a lot of fanfare for the Ujjivan stock then because Nitin Chugh was as blue chip as it came for Ujjivan. And now he's resigned in just 2 years. He cited personal reasons, of course. But let's see. A lot of people that I spoke to said that, oh, could there be more than what meets the eye? I have no idea. But I know that the stock, in all probability, will react negatively. There are some other stocks in focus today. Pidilite, PVC prices apparently have inched higher. Remember, in the interaction with us, they said that they've had inventory losses, and now maybe this could be inventory gains for Pidilite. So let's wait and watch if Pidilite has some positivity. Aarti Industries, the company has approved the demerger of the pharma business as Aarti Pharma Labs. I think for every 4 shares of Aarti Industries, you get 1 share of Aarti Pharma Labs, and of course, you get the resultant value of Aarti Industries as well. Effectively, viewers, demergers are done to unlock value. You would presume that the Aarti promoters know this very well, and that's why they should be construed as net positive for Aarti Industries shareholders. This was known, so no new news. But since it's happened, I thought I'll bring it to you. Amara Raja Batteries, it's a temporary relief, but the AP High Court has extended the stay of the PCB closure notices by 6 weeks. So they've just said that the closure notices don't work for now for under 6 weeks. Till then, I think things should be okay for Amara Raja. So that's the other thing you got to keep in mind. GMR Infra, they'll be able to operate the Nagpur airport. I think the decision was done in their favor. The Bombay High Court ruling happened in the legal dispute against Mihan India Limited for GMR Infra. So that should be construed as a net positive for GMR. There is Indostar Capital, wherein it was known, of course, in market circles that this would happen. But the OFS has been announced, 10% equity to comply with the minimum public float norm. It's about the floor price of 290 rupees per share. It's fairly well sought after NBFC, if you will. Just that the market current is not the best today, so you don't quite know how would the stock react post the OFS getting subscribed to. I'm presuming that they would have done their research and known what's the quantum of subscription that would come in at the price that they've given. So if it's a very successful offering getting closed very, very quickly, even now or just around market opening or slightly post that, then you would presume that maybe there could be some positivity to that stock. So do watch out for that one as well. Just a couple of things. I'm not giving graphics for that. Okay, I can't find my phone. But nevertheless, the point being, there are a couple of very interesting brokerage notes. So Goldman Sachs note on United Spirits is interesting because they have said that they believe that there could be some bit of deal signing that could happen between India and US, India and UK, right? The press reports indicate that interim trade deal, and if the lowering import duty on Scotch happens, then it would have a significant impact on USL. And therefore, that could be positive. Remember, USL was up and about in Wednesday's session. All the liquor stocks were up and about in Wednesday's session. So that is, thanks for that. So that's one thing that you've got to watch out for in the session today. So that is there. Jefferies has made model portfolio changes. They've added iShares, but slashed point each from Tata Steel and Concor. Question is, would metal stocks react to some more pressure because of the price cuts any which way? So, that's one more thing to watch out for. And lastly, while there might be a slight bit of gloomy feeling today because of what the SGS is indicating, and by the way, we don't know how the Nifty would react because the US markets did reasonably okay yesterday. So yes, we'll start off lower. Can we recover is the question. But Chris Wood of Greed and Fear, of Jefferies and Greed and Fear note, in yesterday's note released late last night, has actually sounded the positive bugle on India. He says this, that to signal the continuing structural bullish view on India, Greed and Fear will increase the weighting this week by 2 percentage points with the money shaved off from China and Hong Kong. And if India corrects more sharply in an aggravated tapering scare, the weighting will be added too. Viewers, the story around Chris Wood's note will be up on the BloombergQuint website very, very shortly. You should read the rationale why he's so bullish on India. So I think amidst all this gloom and doom that exists this morning, it is signs of positivity. And remember, as I said, while it's a different kettle of fish at 16,000, northwards of 16,000, and you know where you're getting into, dips have been bought into. The only thing I would urge is be careful of leverage and be careful of small caps. Typically, when IPOs running amok and the kind of money that they're raising, it's happened in the past as well, small caps in the event of a drawdown tend to be impacted the most. So stay in companies which you know very well about. Otherwise, it might be prudent to book your gains or your losses. Thanks so much for tuning in. Stay safe.